Hello and welcome. Thank you for joining me today to go through ABARES' latest water market outlook for 21-22 for the Southern Murray-Darling Basin. This presentation aims to provide an overview of market conditions and the outlook for the year ahead. We draw on the latest information from the BOM and state water agencies. Now, a few things have changed since our last outlook in March. The amount of unused water sitting in state accounts has been drawn down, and this means that carryover volumes, although still quite high, are not quite as high as they had been expected to be back in March. New South Wales allocation forecasts have been revised upward, increasing allocations, and the seasonal outlook has improved, with above median rainfall now predicted heading into spring. So all of these factors have been influential in determining our current market outlook for 21-22, and these are the key points for today's presentation. Water supply levels are set to remain high on the back of favourable allocations and high carryover volumes. Consequently, prices are set to remain low. Regional price gaps are forecast due to regional demand and trade limits, and average seasonal conditions are currently considered most likely. Now, we should point out that ABARES provides forecasts under 4 scenarios: an average scenario, dry, extreme dry, and a wet scenario. But given the current climate outlook, ABARES currently considers the average scenario to be most likely. And this will form the basis of today's presentation. Okay, so this table shows state allocations for selected entitlements there on the left. And in green, we have the current allocation forecast from the states under average conditions. In purple, we have the closing allocations from last year. And in orange, we have historical averages. So looking at the South Australian and Victorian entitlements first, you can see that they're at or near 100%, which is quite similar to last year and certainly above historical averages. The forecasts for New South Wales tell a bit of a different story. So both the Murrumbidgee and the Murray are currently forecast at levels below the level they reached last year. And this is particularly noticeable in the Murrumbidgee, which reached 100% last year for the first time ever and is currently only forecast to reach 61%. However, it is important to note that this early in the year, the Murrumbidgee is already at 50%. So taking a step back and looking at the allocation picture as a whole, based on allocations alone, you'd probably think that the water supply levels heading into this year would be a bit below last year, but above historical averages. Now, keeping that in mind, this chart shows our water supply forecasts for the Southern Murray-Darling Basin for 21-22 under the 4 scenarios. And what should immediately jump out, looking at the average scenario, is that we're expecting water supply levels to be at or around about the same as they were last year. So this begs the question, why, with allocation forecasts a bit lower than last year, will the water supply levels not be lower as well? Well, the reason for this is that high carryover volumes have been brought forward from last year into this year. In fact, the carryover volumes are currently at their highest level since 2017-18. And this additional water, around 2,600 gigalitres, has boosted supply and is accounting for the favourable supply forecasts we see here in the chart. Okay, so our price forecasts are largely representative of the supply conditions seen on the previous chart. This chart shows the observed average prices across the basin for the last 3 years and our forecasts for the year ahead. And if we look at the average scenario, ABARES is forecasting a Southern Basin price of $141 per megalitre for 21-22. And this is comparable but marginally above the price from last year at $130 per megalitre. Now, the high carryover volumes and generous allocations we're seeing explain that prices under all 4 scenarios are actually relatively low in historical terms, particularly compared to the drought years of 17-18 and 19-20. Okay, so ABARES modelling is forecasting price gaps to emerge throughout 21-22 between regions, and this is something we've seen in recent years. Now, this chart is an example of that, showing 2 of those regions. We have the Vic Goulburn and the Vic Murray below. And you can see that under all 4 scenarios, we're forecasting price gaps to occur, with a $44 gap expected in the average scenario. So why do these price gaps occur? Well, looking at this example, we have a net exporting region, the Vic Goulburn, and a net water importing region, the Vic Murray below. And there are trade rules that govern the amount of water that's allowed to be traded between the two regions. When these trade volumes hit a certain threshold, the limit binds and trade is halted. Now, the mismatch in demand and supply that results is what causes the price gaps like the ones we see in this chart. Now, what's been interesting is that these price gaps seem to have become a more prominent feature of the market in recent years. And it's a twofold reason behind this. First, there is a concentration of water-intensive, high-value crops such as almonds in the regions that are in the lower Murray area, like the Vic Murray below. And the second is that due to trade limits, the amount of water that can be traded to meet this high demand is being restricted. And this results in these price differentials. So looking ahead, with almond trees expected to continue to mature throughout 21-22, we can probably expect to see these trends continue into the foreseeable future. Now, there is one other thing to note on the subject of trade limits, and this is something that we cover in more detail in our report. And that is that there have been ongoing changes to the Goulburn to Murray trade rules. And while it does seem that the new rules will ultimately reduce the volume of water that can be traded from the Goulburn to the Murray, so that we don't see those very high volumes that were considered too high in 2017-18 and 19-20, the exact impact is unknown and will have to be observed over time. So in summary, take-home points from today. Water supply is set to remain high, supported by high volumes of carryover and favourable allocations. Low prices are set to continue as a result, and regional price gaps are forecast, driven by regional demand and changes to trade limits. Thank you.